This company just prints and prints and prints cash. What the heck are you putting in there? I am not too concerned about them. Pay me through this, pay me through this. And if this market falls, it's going to fall with it. 5 stocks that the Everything Money community and YouTube finance community are looking at right now. We're going to go through them. We're going to put a price on them. Let's do it. So the first one is Meta. This is, of course, a stock that I like very much. I own a few shares of it, but the majority of it I did get rid of right before that big earnings thing spiked up. Now I'm approaching it in a very different perspective, but it's still a company that I do want to own for quite some time. So let's look at the 8 pillars of this thing. A couple of good things, bad things about Meta. Number one, over 3 billion people use the Meta platform in some fashion, that being Facebook, Instagram, WhatsApp. I use all 3 of them. Well, I use Facebook the least, but Instagram and WhatsApp I use every day. I actually have WhatsApp open right now. I'm looking at it. So that's something that you cannot take away from them. There are so many parts of the underdeveloped world that when they get access to computers, when they get access to internet, what are they going to do? They want to connect with people. They want to connect with people all over the world. They're going to be downloading Facebook. So that's something great. Something else, the 8 pillars light up. They absolutely light up. The revenue growth is still there. The cash flow growth is still there. They are investing heavily in the metaverse, and some people look at this as a negative. I don't. I look at this saying their free cash flow over the last 5 years, $23.67 billion, $19 billion last year. I mean, they can afford to spend $10 billion a year on this. And if it fails, let's say they spend $50 billion on this and it completely fails, which I don't think is going to be the case, but let's say it does. Well, that $10 billion goes right back in and they move on. Business as usual. I'm not worried about that. You can see that the 8 pillars are completely lit up. My 8 pillars are completely lit up. And guys, you can come in here through tools, pillar screener, create your own 8 pillars, whatever you want to do. You notice my 5-year ROIC is greater than 12%. It's 16.35 with them, which is incredible. The only thing it doesn't hit is they don't pay a dividend. And for me, that is perfectly fine. Let's go through and just quickly look at what the analysts have to say about this. They see some, earnings per share growth is there. It's back and forth over the next couple of years, and I think that has a lot to do with spending in the metaverse. Revenue growth, however, is certainly there. So let's run a stock analyzer on this thing real quick. For stock analyzer, guys, I'm going to put in 3 different cases. So I'm going to go with a base case of, let's say, 6% revenue growth, 9 and 12. Let's say that 12% they hit. Metaverse hits, they just absolutely crush it. Profit margin, let's go 25, 28, 31. Free cash flow margin, I'm going to do the same thing because with such a big mature company, they should match up over a long period of time. I'm going to go with 16, 17, and 18 here. That high ROIC does justify those numbers, I think. 10, I will go 12 and 14. Let's see what I have this at. So you can see it's on my watch list at 175. That's kind of where I want to start paying attention to it again, and I do think it's going to fall back to those levels. But all day right now, 211 to 329, middle ground of 266. This is why Meta is on my radar. And this is why you can make a very strong argument that it is falling in value territory, even at this price. So number 1 is Meta. Guys, I just ran through Stock Analyzer. You can have access to this, and this may seem overwhelming right now. You might say, what the heck are you putting in there? We have a community with thousands of people that talk. People use this over 1 million times last year in 2022. I use this multiple times per day, not just for videos, but for my own stocks. And I'll take a screenshot and I'll send it over. You also notice that it's on watch list. So once Meta hits $175, I'm going to get a text message. I'm going to get an email. I'm going to get a notification on my cell phone. Everything that you need to know about Meta is right here on this phone in the app. $7 for 7 days right now. $29 a month. It's going to be going up, so join it. Okay, next stock, NIO. NIO's an interesting one. NIO is the Chinese car company. I think that if they could put together some type of infrastructure for charging that is at the same size capability as Tesla right now, they are going to do very well. They have had incredible growth of cars. They have had incredible amounts of deliveries. They are one of the leaders over there in that market. So it's something that is probably a little bit too early for me to jump into, but it's something that is going to stay on my radar and going forward. So 8 pillars. It's hard to look at this and say, hey, but remember though, just because I'm seeing a lot of red X's here doesn't mean that you don't invest in it. This is a screening process. There could be a reason for each and one of these not being lit up in green. So PE ratio, not surprising. There is no net income growth. Revenue growth, however, is there. Also not surprising. They are diluting the heck out of you. I don't like that as somebody that's wanting to buy this company. Now, ROIC, that's a big number. I'm not sure what's going on with that. I wouldn't pay much attention to that. Debt, can't calculate it. Free cash flow, not there. So as you can see, it is super early. And I bet you, before I click the analyst page, I bet you there's not a lot of analysts going out to 2026, 27, 28. And that would be correct. So you have 32 analysts, and it drops down to 12 in 2025 and 4 in 2026. What does that mean? It means that nobody wants to put their neck on the line for this one because it's so unpredictable. That's not a bad thing. Just let the company mature a little bit. I'm going to do a stock analyzer on this, and let's see what we can do. I'm glad that we did this one because it's so vastly different from Meta, the first stock that we did. So stock analyzer. I'm going to put in here, I'm going to go 13. You know what I'm going to do? I'm going to do 10, 20, and 30. I'm going to run the gamut on this thing. Let's say they crush it and go 30% revenue growth for the next decade. But I think 20% is more in the reasonable range. 10, I don't know. It's hard to do profit margin, guys. I will go with 10, 15, and 20%. You notice these are pure guesses what I'm putting in here. And that's the problem with an investment like this. It seems really cool. It seems really attractive because it's so hip and it has this great potential. But right now, this is all speculation. 12, 14, and 16. And you could even make the argument to go a little bit higher just because we don't know a lot of numbers. It's not even on my watch list yet. But based on my wild speculation here, yes, it falls into a range of $10 to $80. But again, this is wild speculation. I don't know if they're going to do 10% or 30%. I don't know if this profit margin is correct. They could be doing 4% or 40% profit margin. I have no idea. That's the problem with NIO right now. But it's something that we can look at. All right, next one, Google. Well, Google owns the search engine world on the internet. There's two platforms. One's called Google, one's called YouTube, and you're watching this on YouTube right now. Those are the two largest platforms for search in the world on the internet. So I am not too concerned about them being overtaken, especially by Bing and ChatGPT and this and that. It's just, I'm not really worried about it. What I am worried about is paying the right price for them to get a great return over a long period of time. This thing was most recently in the low 90s. I think it was around $90 a share. That was just 10 days ago. Now it's at 103. So you can see that all of this financial news, people diving into tech stocks for safety, is boosting up their stock price. All right, 8 pillars. So this is the 8 pillars that I love to see. I love seeing these two valuation metrics just a little bit high. And I bet you that you can make justification to pay that PE for both of them. But great return on invested capital. Amazing return on invested capital. Free cash flow is absolutely incredible. It's $60 billion this year. The 5-year average is about $45 billion. So this company just prints and prints and prints cash. All right, let's see what the analysts have to say. And again, even with this one, you know what? Let's just come here real quick on the income statement. Okay, you see how this had this insane rise? This went from 180 billion in 2020 to 280 billion in 2022. That is a massive, massive, massive jump. I don't think that that's sustainable. And that's probably why you're seeing analysts that are not going out very far. You go from 49 analysts on Google. Every analyst should be talking about Google, and they dropped down to 11 and 9 in 2026 and 2027, respectively. So, man, 309 billion in revenue to 470 billion, high single-digit growth. On the earnings side, you have better growth, going from $5.24 to $9.73. That's because of that return on invested capital that you're seeing that number much higher. So let's run this through Stock Analyzer. Let's see what we want to pay for Google. I'm going to go very low. I'm going to go 5, 7, and 9%. Profit margin seems extremely consistent around 20, 22, 24. I think it's going to fall somewhere in there, especially as the ad business gets bigger than it already is. Your profit margins are going to get bigger. PE, I'm going to go with 17, 18, and 19. And desired return, I will go 10, 11, and 12 because I don't think any of those numbers, I already put some pretty low numbers in here. I don't need to generate much bigger return than that. Okay, let's see here. $80 to $120 with a middle ground of 100. And I told you, I bet you can justify this number. For me, it's probably closer to 80, around 85. That's probably my buy number personally. But Google is getting really close to the wheelhouse. And for those of you that did not think that Google could fall from all of its glory, well, look at this. All-time high, $151.55, February 2nd, 2022. And people were saying, there's no way Google can go to 100. Well, it went to $83.34. And if this market falls, it's going to fall with it. All right, next one. One of my favorite companies, Apple, which is almost $160 a share, which is absolutely incredible because just a few weeks ago, January 3rd, 2023, this was $126.36. Amazing. Now, Apple is arguably one of the best companies in the whole world. Great product, great ecosystem, great brand loyalty. You have the same metrics that you saw with Google. I say it's not really overvaluation. Over our numbers, I bet you can justify paying these. I bet there's some way that you can get to justify paying these, or maybe just a little bit lower. But the thing that sticks out to me most here, buying back shares, don't know if I like it. And they might have a program where they just do it every single year. I can't remember, but we'll check it out. ROIC, though, 38%. I'll take that all day. That's a company that can reinvest in themselves and generate 38% return on the money that they invest in themselves. That's less work that I need to do as an investor. And they're buying back shares. They're paying a very, very small dividend. I'm happy about that. I don't need to be paid a dividend yet. Keep investing that into yourself. Don't pay me through dividend. Pay me through this. Pay me through this. Now, their cash flow, 5-year average free cash flow of $81 billion, the trailing 12-month is nearly $100 billion. That's a lot of cash. All right, let's see what analysts say about Apple. Man, earnings per share growth, $6.09 to $8.84. It's over 10%. And again, even with this, guys, let's go to the income statement. I just want to look at this real quick. Not as big of a jump that we saw with Google, but it's consistent growth. But is this sustainable? Is this $387 billion sustainable? Or is it going to come back to 360, maybe 355, 340, something like that? Is it sustainable? That's the question you need to ask yourself. And I think that's why you're seeing so few analysts going out further than 2025 because of the unknown. So looking at it, I mean, high single digit, mid single digit growth. Now, here's something that I think needs to be said with Apple. They are transitioning. They're not really the innovators that they once were. They're more transitioning into becoming a software business, a subscription business. Plus, don't get me wrong, they're still selling hardware. They're still selling computers. They're still selling iPhones, iPads, etc. I think they're going more to the software business, which is going to generate bigger margins. And they have all that cash. There's something that they can do with all that cash. I'm not going to say it right now. Maybe you can figure it out, or you've heard me on the morning show. But let's get into some numbers with Apple. Revenue growth side. Oh boy, let's see what we should do with Apple. Let's go 6, 9, and 12. And I know 12 sounds big, but if they turn this thing into a subscription business, they can really drive revenue in a new way. Plus, still selling all of these things, it can be incredible. All right, profit margin. Let's go with 22, 24, and 26. Again, 26 is really high because software. PE, let's go with 17, 18, and 19. High ROIC, I'm going to give them the benefit of the doubt on these. And 10, 11, and 12. Actually, you know what? I'm going to go 10, 12, and 14 because those numbers on the high side are pretty big. And if I take that risk, I want to get a good return. $130 is my watch list price. 106 to 100 and call it 160 middle ground, $130. I actually think I'm going to move this up to 140. Why? Because I want to buy this thing at 130. Therefore, I could sell puts at 140. If you're interested in selling puts or what that means, come and join the software. Oracles of EM, $17 for 7 days. It's a trial. So you'll get teachings from me. You'll get my options series, which will walk you through everything you need to know about what I just said about options. And you get the community. You get all of the people that are doing the same thing as you, people that want to buy Apple at these prices. You can discuss it with them. Pros, cons. Sign up for the software today. You're going to love it, I promise you. Palantir, last one. This is a company that I was interested in buying, and now I'm not. I had puts on this thing at $4, and this was back when the stock price was around $5, and I was looking at getting assigned these shares. Then something came up in the way that they account, shared by one of our EM users, who is very, very active in the chat if you're interested in talking to him. But that kind of spooked me. So it was already a very new investment. I wasn't putting a ton of money into it, but it was enough to make me step back and say, you know what? I want to see a couple more quarters of data because I want to see what the heck is going on here. Is this a common practice of Palantir? Now, the good thing is they've had 9 consecutive quarters of free cash flow. That was great. But it was the accounting thing that threw me off. You notice this is an early on investment. This is one of those ones where, I'm not going to lie, I was getting into this with the mindset of, Okay, let's see if we have a 100 bagger here. It is such a new company. It is such a small company. It has great ties into the commercial world. It has great ties into the government world. This was a company that I could see growing and growing and growing. I also love Peter Thiel, however you say his name. So it was on my radar heavily. Now it's not. Let's see what the analysts have to say. I'm sure there's not many here. Yes, it goes from 18 to 3. They look to double in revenue. I mean, the revenue growth is there. The earnings per share growth, it's nothing substantial, but I think there's a lot of unknown out there about this thing. So let's run through Stock Analyzer real quick and put in some numbers. They're seeing, let's see, 20+% revenue growth. So let's go 15, 20, and 25. Profit margin. It's hard to do profit margin, but again, I was looking at free cash flow and I was saying, okay, I'm not so worried about profit margin. Profit margin will get there. They are generating free cash flow. That's was my excitement was coming from. That's where Paul's excitement was coming from as well. So profit margin, let's go 15, 20, and 25 as well. Free cash flow margin, let's say, man, it's a very speculative play. That's the thing. 20 and 25, I'm going to do the same thing. PE, let's go with 18, 19, and 20. I think the return on invested capital will be there. It's just a matter of when. 12, 14, and 16% return. My watch list is 450. I'll probably start looking back again at that point because that stock price needs to fall in half. It's $8.50. And right now, low end $4.79, high end $13.14, middle ground $8.23. This is where I'm paying most attention to it. And notice, if this happens, I'm generating a 12% return. Plus, I can do options on top of that. Guys, subscribe to the channel if you like this. Have a great day.